Hi friends, today we will discuss the Canons of Taxation. I am Professor PURUSHOTHAMA, Assistant Professor, Department of Economics, Dr. Dayananda Pai P. Satish Pai, Government First Grade College, CARSTRET, Mangalore. The Canon of Taxation, it refers to the principles underlying in good taxation system. Adam Smith was the first economist who stated the general principles of taxation or rules of taxation in his famous book Wealth of Nations in 1776. Adam Smith's canons of taxation are as follows. Number 1. Canon of Equity. 2. Canon of Certainty. 3. Canon of Convenience. 4. Canon of Economy. Adam Smith's canons of taxation can be discussed as follows. Number 1. Canon of Equity. It implies that the burden of taxation must be distributed equally or equitably among the taxpayers. Adam Smith advocated a system of progressive taxation. It means the rich should tax more and poor less. The second canon of taxation is canon of certainty. It means the tax which an individual bound to pay ought to be certain and not arbitrary. A taxpayer should know in advance how much tax he has to pay, when to pay, and where to pay. The third canon of taxation of Adam Smith is canon of convenience. It implies every tax should be levied in such a manner that it is convenient to the taxpayer. For example, the best time for the collection of land revenue is the time of harvest. Fourth one is canon of economy. It implies the cost of collection of taxes should be minimum. A tax should bring maximum income to the treasury. If a major portion of tax is spent on the collection of tax, it cannot be considered as a good tax. Now we will discuss the canons of taxation given by other economists. Economists like Bastable, Shiras, Hicks suggested few more canons of taxation. They are as follows. Number 1. Canon of simplicity. 2. Canon of productivity. 3. Canon of elasticity. 4. Canon of diversity. 5. Canon of uniformity. 6. Canon of flexibility. 7. Canon of coordination. First one, canon of simplicity. A tax should be simple so that the taxpayer can clearly understand its implications without the help of experts. If it is complicated, it is difficult to the taxpayer. 2. Canon of productivity. A tax should be such that it should yield sufficient income to the government. If a tax brings more income to the government, it is called productive tax. 3. Canon of flexibility. The canon of flexibility implies that the nature of taxes should be such that the tax can be realized without any resistance from the people. Imposition of new taxes should not be opposed by the people. Fourth one, canon of elasticity. It implies income from tax should be capable of increasing or decreasing according to the requirement of the nation. If the government needs more income during economic crisis, a tax should be capable of yielding more income. Next one, canon of diversity. According to this canon, a variety of taxes should be imposed on a wide variety of commodities and people. If a single tax is imposed, there are chances of tax evasion. But if there are multiple taxes on different commodities, it is difficult to evade tax. Next one, canon of uniformity. There should be uniformity in the tax system. The method of imposing all taxes should be one and same throughout the country. The tax rate should be determined on the basis of general objectives of taxation. The seventh one is canon of coordination. There must be coordination between the different taxes that are imposed by different authorities. Coordination is necessary to facilitate both the taxpayers as well as the government. So these are all the various canons of taxation given by Adam Smith and various other economists. Thank you for watching this video. Thank you, one and all.